Hey, all, Sean Maloney, Digital Business Masters. Welcome to another overview call in the form of a strategy call. So we do these every single Monday, midday. Big hello to our YouTube community. Many thanks for being there. Make sure you hit the bell, hit the like, then you won't miss a minute of updates on this because this is the most valuable information in the world. And not only do we provide the information to show you maybe why you're not getting as far forward as you may have expected at the age you are now, but we also show you the practical steps in which you can actually do things, okay, if you've got the resilience, the fortitude, and all the things it takes to run a proper business, right? If you've got the ability to go forward and actually master how to create consistent online incomes, okay? It's not a lottery ticket. It's not a hit and a hope. It's not a speculation. It's not a try to buy success. It's a business. And you have to set it up as such and work through those first 5 years at least 5 years into getting yourself into what's called positive cash flow. Go and look at the average company out there that sets themselves up. We do it digitally, and it's much more efficient and much more quick in many ways because we're working with globally connected balance sheets, especially with Bitcoin. Right? So as soon as you understand the difference between currency and money, which is your first port of call, then you've got to go and figure out how to accumulate money. And I mean money, I don't mean currency, so that you can move forward then with equity and yield and all the things we'll talk about in part 2. You'll see the link below for part 2. If you're not part of the DBM Academy setup, at least the systems subscription, then you're not going to be able to get access to that. So make sure you do become at least a system subscriber. It's not difficult. It's something that's very important. Now, we're not here to give you any advice, especially not financial advice. What you do as a grown adult is on you. But we do have the mantra of always seek financial education. If you've been seeking financial advice for 30, 40, 50 years, have a look at how that's gone for you. What we do is we combine 3 now major ways of ensuring that come hell or high water, because it can be challenging, obviously, and it's those challenges that you'll get from the mass media, you'll get from bosses, you'll get from governments, you'll get from your brother-in-law. Everybody will give you the challenges. What you've got to do is understand that combining these 3 elements of fundamental income generation, you are more than capable of overcoming the challenges. You are. If you let anybody else influence you, if you let anybody else try to put you off the mark and tell you something else or give you something other shiny object, you will fail. Whatever you've gotten involved with at any point in time in this particular business, and that entity is still active and still present and still keeping us updated, you have a duty of care to yourself to make sure that you keep things moving. And that's particularly relevant in the variable income model that we operate. And to be fair, is still our favoured sector. It's the most powerful way, but it really takes a lot of persistent, consistency and all the rest of it. It really is challenging the variable income. The easiest way is simply to dollar cost average Bitcoin and, if you wish, physical metal. That's the easiest way, right? But it takes much longer. It's much longer, as you'd expect, right? These days, through AI technology, we've figured out how we can start to create more and more fixed incomes into our digital business. And that's the new kid on the block. Yeah, it's brand new, actually, in many ways, been around a couple of years. And the whole idea is that we combine fixed and variable incomes. So fixed can compensate when variable's not quite working. And then when variables kick in what I call liquidity events, you can take less pressure, put pressure off yourself, because fixed incomes demand time, right? You've got to put time into it, yeah? Time being the most valuable commodity on the planet, of course. So what we want is a balance between the both. Either way, both of them go towards building your accretive balance sheet. Now, Module 5 of the DBM Wealth Builder series, which got launched on the 1st of January 2026. It's a 12-module series. We're in Module 5. Module 5 breaks down how we are currently creating, very successfully, income on both fixed and variable levels. Right? It tells you exactly what you need to do. So if you're not already at Module 5 in the DBM Wealth Builder series, then catch up, okay? You're not going to be able to jump into Module 5 and suddenly start going into systems and income generation. You're going to have to go through Module 1, mindset, module 2 and 3 skills. Okay, too many people try to come into this industry just speculating and hoping they can buy success. No, it doesn't work. If you're going to be successful in mastering what it is for consistent fixed and variable income, you're going to have to sort your skills and your mindset out first, which is why the DBM Wealth Builder series is modular. Right? Too many people dip in and out, lots of marketers floating around the place trying to sell you snake oil that's going to make you, all the success in the world. It doesn't work. You have to work on yourself first, okay? But ultimately, these three aspects combine together to make it work. How do we know that? Well, in case you've been under a rock, which unfortunately a lot of people have, not in our community, but in the world, you have to understand that the fiat system is designed to keep people at best on a level, but in reality, it's on a permanent decline. And the reason for that is quite simple. The fiat currency is by design something that will devalue, it will debase as they print more of it. Now, this has been going on since 1971 in full fiat currency terms, but in 2008 to 2010, it became a complete car crash, which is where people like myself came from in understanding Bitcoin and physical gold. Right? That's still the main engine that drives us when it comes to the accumulation of sound money. So once you understand that just earning income in wage terms, earning a wage, and for some people it's earning wages in various jobs, and that's only coming to you in fiat currency, and then you're choosing to use that fiat currency to go every month and buy liabilities. As soon as you realize that that isn't going to get you anywhere, if you're earning less than 150, 200,000, there's a podcast we did on this yesterday, talking about this trap. Yeah. As soon as you realize that fiat currency isn't going to give you a future, the sooner you can start to think about, okay, well, no problem. Everybody has to go and earn a living. We bring fiat currency. We mine fiat currency all the time. We do a lot of that with the fixed income stuff over with AI. Bring that fiat currency in, no problem. But make sure you convert that fiat devaluing currency into money. Yeah. And push it through cash flows, push it through yields, push it through equity, build a balance sheet, and then use the balance sheet to fund liabilities. It's a big, big difference. Anybody who's run a business understands that that's how managing directors and shareholders and people with influence over balance sheet decisions, that's how they thrive. They fund life through balance sheets. They don't buy. Yeah. So learn this and use the system that we have to help you get to where you need to be in what's called critical mass, so that you can start to drive forwards and be ahead of bosses, banks and governments, not abused by them. So as I say, we do down 3 pillars in the variable sector of our business model. Standard should be dollar cost averaging Bitcoin. Whatever you do, just dollar cost average Bitcoin. If that's all you ever want to do, just do that. That's all right, right? But you're going to have to be patient, and you're going to have to be disciplined, and you're going to have to make sure that you never, ever, ever sell, ever, no matter what's going on. And you certainly don't give your Bitcoin to ETFs and BlackRocks and everybody else, right? Stay self-sovereign. And to do that, you need proper skills, which is why you should be looking at modules 3 and 4 in the Wealth Builder series. Get your security organized, get your skills where they need to be safe and secure in self-sovereignty. Work with smart contracts. Okay, we'll talk about in part 2 how we mastered how to understand and work and put principle inside smart contract-based activities all the way back in 2017, 2018 when DeFi first arrived. Okay, that's been a very challenging world to operate in because it's so new, and only really in 2024 did that start to become regulated and organized in the way that you'd expect. So, we're very early. That's what we do, right? We were very early in Bitcoin. We're very early in smart contracts. And we're also very early in many of the altcoin systems, because while Bitcoin provides huge equity, 68% CAGR over the past 14 years, and while smart contracts are brilliant for yield when they work properly, what we really want is a combined entity of altcoins that provide equity and yield in one ecosystem. So we actually are well and truly involved and entrenched, and we have been for 4 years now, with the second most valuable digital asset on the planet. Yeah. And that asset's job is to try and master what it is to hold together equity and yield in one ecosystem. We'll talk about that more about that in part 2. Is it easy? Definitely not. Is it for everybody? Clearly not, because so many people walk away crying into the cornflakes. But at the end of the day, for those of us who do sustain, and right now, as you'll hear in part 2, we're going through an injection of funds there. That stuff we purchased years ago is now coming back to us again, and we're, making hay while the sun shines over there right now in the altcoin industry. So those are the 3 areas we work in. There's a lot to take on board. There's a lot to think about, even what I've said so far, let alone as I start to talk about macroeconomics and geopolitics. But the big idea here is that you take your time, take a breath, work with people who've got what you want and can prove it. Yeah. Work with other people in communities of like mind. Yeah. Help each other out. You're going to need to. Like any team, you need all the parts of the pitch covered with people who are good at that particular area of that particular part of the pitch. So the Wealth Builder series is like the central place where everybody can come and work through in sequence and in step what you need from mindset through skills to income. So it's the systems, then income, and then wealth. You need those 5 things. And just because you have got to income, which many of you have, and even now starting to think about wealth management, the job isn't done. Understand that earning income is actually the easy bit. The real hard bit is maintaining the income and keeping hold of the income. That's what wealth is. So as soon as you get to that level, you're going to have to go all the way back to mindset again and learn new skills and go back through the systems. But it never stops, as you'll find out as we go through this next few modules in the Wealth Builder series. Mastering wealth is much different than mastering income, and in fact much harder. So, but much more enjoyable, of course. At that level, you're deciding whether you're flying business class. At that level, you're deciding, to pay off mortgages. At that level, you're deciding which car you want to drive, how you want to treat the family. That wealth's a wholly different thing than income, of course, right? So those working through that process, well done. Now, I always preface, before we go into the macroeconomic updates from the last week, etc., I always preface with this slide because, as ever, and there's lots and lots of people who listen to this call, so everyone's at different places, but I still get a lot of people in my circles, in my family, in my wider communities, even in the DBM community, say, oh, it's too difficult. Bitcoin was at 126 and now it's at 94, whatever it's at, etc. It's too volatile, I can't stand it. Okay, no problem. If you think that's volatility, you should have been around in 2015. Now, nobody is able to have a sensible discussion around current challenges in something like Bitcoin, with this chart. Because at the end of the day, yes, of course, volatility in the near term is what puts most retail people off, which is still predominantly what makes up our client base. But, you've got to look at it in the round. You've got to zoom out, basically. You've got to get above the canopy and you've got to see the process. It won't be very long, probably by 2030, that we'll be looking at this chart zoomed out again. And the volatility that we're experiencing today will look very much like the volatility we saw back in 2020. It will look no different, but you'll be on a much higher plane. But just like I say to people all the time, those of you on the call maybe did get involved back in 2015, etc. And we were then talking like this, saying, oh, look at 2015. It went up like big gangbusters, 2015, 2016. We thought we were so clever. Yeah. And it collapsed and went down, but it didn't really collapse. It looks like it did on this chart, but it didn't really collapse. It was just a case of saying, right, well, we know where we are. We know where we are in the cycles. And now we manage through it. We never stop dollar cost averaging. The big difference over the other side of this yellow line is everything I'm talking about next, which since 2024, it's a completely different kettle of fish, because now we're dealing with different challenges. Okay, we have to keep our eyes very, very squarely focused on bosses, banks, and governments. But at the same time, the liquidity coming into this technology of Bitcoin is much, much, much bigger. Much bigger. In fact, it's so big, arguably, it's being manipulated at the moment, right? But no different than it was back here when it was being manipulated by whales. It's just being manipulated by big institutions now, that's all. Either way, you can't put the genie back in the bottle. So, it's very important just to have that resilience, let's say. And that resilience comes from data. It comes from information. It comes from awareness. And it comes from being as close to the money supply as you can possibly be as an individual. Now, you can't be close to the money supply in the fiat world. It's impossible. You're going to be right out on the edges, employed, self-employed. You might have a pension. You might be sort of touching the banking systems in a very, very small way, but you're really not anywhere near the center of the money supply. When you own gold and Bitcoin, you are right in the middle of the center of the money supply. So this is another skill and arguably another mindset. We do get people in the community saying, "Oh, it depresses me listening to the news. I can't keep up with it. It's not for me." Okay, fair enough. But if you are going to be in the center of the money supply, you do have to understand how the consequences of what these bullet points are every week. So if you don't want to get involved with all that, then we do it for you. We're full time at this, don't forget, because we've earned the right to be over the past 10 years or so. So what I can do is go through the big picture macro updates that we've spotted, and there will be many, many more, of course, and give you a one-stop shop every single week across the channels to be able to see the relevance of these macro and geopolitical updates in your journey. That's the whole point of what we do in this next 10 minutes or so. All right. So, as you know, we've been involved with Michael Saylor through Master now over a year. Amazing. And very, very quickly. And it's fascinating to behold. Okay, you're going to get two churches going on. You've got the Bitcoin maxis, as ever, saying, do not give your Bitcoin to the financial industrial complex through Bitcoin treasury companies, etc., etc., etc. I get that. Yeah, we still very much recommend that you should have predominantly most of your Bitcoin in self-sovereignty. But you've also got to earn a living, right? You've got to create cash. You've got to create dividends and stock payouts and yields, etc. So, we do have a foot in the camp, just like we do with collateral. So it's very important. But the fact that Master is getting closer and closer and closer to MSCI indexes, in other words, it's being accepted into the normal financial mechanisms, is a big deal, right? So it's not going anywhere. And if you look at the big macro Master maxis of the world, the people who absolutely 100% believe in Master, then you'll follow those boys and you'll see the probability that Master as an entity will become by far the biggest company the world has ever known. Right? And the mathematics are already at that point to show that. It's just a case of the larger institutions reflecting that into value. So, it's a very interesting time. Like I say, 10 years ago, it was very much the whales and the cowboys and the early entrepreneurs, and they were causing these disruptions and manipulating things. Now it's the big institutions. Nothing's new in this life. It's just a case of understanding the reflection of those things on your business every single day, every single week, etc. $5 trillion NVIDIA CEO said he's now investing in Bitcoin mining companies. That's via Bloomberg last week. Okay. So these are big deals. Obviously, anybody who did the blockchain assets course with me back as far as 2019, if you remember the pyramid thing, the triangle thing we did, and I was explaining the reasons we own Bitcoin, the reasons we own chip companies, okay, etc. It was very much a hierarchy. And those of you who bought NVIDIA back in 2019, congratulations off the back of that conversation. We've certainly done very well out of it. Fund managers like Mike Oldfred said Bitcoin is heading to over $300,000 if it tops 94,000. Again, sound bites. But what we're looking for there are names, big names like Mike Alfred, and them, consistently coming out on CNN and all these, let's say, mainstream news channels and putting these headlines into the mix. That's why I bring that up. Billionaire Max Kaiser, follow Max Kaiser. We've been following Max Kaiser from very, very, very early on. As entertaining as he is, and back in the day, he was looked at as a bit of a crazy, he has a very interesting way of putting things across, let's put it that way. But he's now been absolutely vindicated. He's obviously a multi-billionaire because of his activities with Bitcoin since 2010. And the whole idea now is, if you guys, some of you do follow the silver squeeze and have followed the silver squeeze that happened many, many years ago, is he's talking about that same type of squeeze effect being put onto the JP Morgans of this world through Master, which goes back to what I said, that inevitably Master will become much more powerful than the likes of JP Morgan, etc., over the coming years. And that's because of what they're doing with what's the equivalent of the silver squeeze, which is called the Master squeeze. So keep an eye on that. Okay, it doesn't really reflect on us too much, other than give us the benefit of being connected with a globally connected balance sheet called Bitcoin. Okay, these are just accelerators, that's all. It's going to be uncomfortable. It is going to be uncomfortable, but was it ever thus? The whole idea is nothing worth having in this life is easy. X announced yesterday that they'll be building in a price tracking mechanism directly on the timeline. So it'll be like $BTC, $ETH, something like that. They're building that in. That was announced yesterday. So, you know, Musk sits in the background, obviously he's the puppet master. Yeah. But at the end of the day, he's given many hints over the years about how much he understands the need for blockchain. He definitely understands the need for Bitcoin, right? He's just very mischievous, right? He knows that's the way he's built, right? If you've read his book, you understand how he comes across. That's just the way he is. You've got to read between it. And as ever, we get to slipstream the best, biggest players in the world, your Mike Saylors, your Musks. We get to slipstream these people because this is the world we're in, right? This is the whole idea of working on a globally connected balance sheet. Similarly with Apple. Apple Pay now goes big on Bitcoin and crypto. The Trust wallet they have now supports Apple Pay in 45 plus countries. Okay, so that's new news. Apple, again, as you'll find when I talk about the geopolitics, there's lots of laggards coming through now. People who've been quite slow to the party realize they've got no choice, and it's just putting more and more wind in the sails as we drive the next phases of our business up to 2030. Again, Mike Saylor says all his best investments were in networks that everyone needed, no one could stop, a few could understand. Bitcoin is a monetary network, right? So if you've studied Michael Saylor, if you look what he did in the early days, especially with Apple stock, that's what he's talking about there. Yeah, it's everybody needed it, few understood it, and no one could stop it. Now, we've been doing that from DBM as far back as 2014, 2015, right? Much more on our own. Can't be anywhere near as bullish as Mike Saylor's being in 2025, 26. But that's exactly what most of us have done here. Yeah, we knew people needed it. We knew no one could stop it. And we definitely knew few people understood it. And it's still the case today. So you, by definition, if you're listening to my voice right now, you're in an era whereby the vast majority still do not understand that Bitcoin is the monetary network. Think about that. Portugal now offers 0% capital gains on Bitcoin for a little over a year. That's global game theory at work. Now, Portugal aren't stupid. Yeah, they're pretty quick on these types of things. They've been doing, incentivized reasons for people to move to their country for well over a decade, as has Cyprus, as places like Malta. I'm talking about Europe there, and you've got, the same going on with Puerto Rico and El Salvador, etc., Delaware, etc. Now, these entities, as geopolitical and geographic places to locate yourself, which is basically what these are, they're called countries, that some see it, some don't. And we'll talk about geopolitics in a minute, where the laggards are slowly coming through, not least with which is the UK. Goldman Sachs says major Bitcoin catalysts will accelerate adoption in 2026. Again, lots of sound bites coming from the institutions. Yeah, I'd just like to sprinkle them in, because at the end of the day, all this does, it gives us more and more credence. Now, it doesn't give them any credibility, but it does give us credence. Right? So the whole idea is to understand that we do not trust bosses, banks, and governments. We won't do, probably I certainly won't for the rest of my life. But what we do is use them. They've used us for years. Now it's our turn to use them. And if you've been accumulating gold and Bitcoin over the past decade, you're very much on the front foot to be doing that. Yeah, because now these guys, they'll do anything, right? They'll sell you their granny to make the cut. They don't believe in this stuff. A lot of them don't understand it. They're just being given the remit by government, top down, to start to get involved. That doesn't mean they understand it. It just means they've seen an opportunity to make a cut, right? That's clear. So be on the front foot of that, and anything they do benefits your balance sheet. That's the way to be. You've got to flip it. That's why we work so hard on what we do at DBM. Now, last but not least, geopolitics. Geopolitics. Again, I could probably spend a whole hour on geopolitics, but what we've got to try and do, I think, is just try and stay in lane with regards to the salient points at the very top of this. And all that's basically happening, you go into a multipolar world, and it's a case of the dollar being managed in terms of its devaluation. It has to be. Right? That's what's happening in Venezuela. That's happening with the oil. All this is an orchestrated step. Now, you're going to get the big conspiracy guys, the Chisara and the Sara guys saying it's all being done, managed, planned, and everything else. Maybe it is, maybe it's not. And you're going to get the other extreme of people who just don't have a clue what's going on, and they just think that the world carries on the same every single decade. It does not. The truth is somewhere in the middle, right? But we're getting these major seismic shifts going on. And at the end of the day, all it really matters is that they're going to need to base currency, right? And you've got to make that be very clear on this distinction. They're going to make sure that currency sits somewhere on a base level in order for the world to carry on. Now, they're going to do that in many different ways, and currently they are doing it in many different ways. Our philosophy, as has been since 2008, or as soon as we understood it, was to get involved with sound money, gold and Bitcoin, that can't be duplicated, can't be destroyed, can't be printed, is fixed in supply. Obviously gold has a 2%, but you know what I mean, and is incrementally becoming more in demand. In other words, as fiat transitions across, more and more people transition across. That's everything I've just been talking about in the macro. Now, if you keep an eye on that, you're going to be absolutely fine, which is why we simply dollar cost average, right? But on the journey towards that place, they are going to cut and weave and slice and dice in all sorts of different ways. And you're going to hear CBDCs, you're going to hear about stablecoin treasuries, you're going to hear about all sorts of things, right, that are really going to confuse us. And we're pretty good. We're plugged into the center of the money supply. Imagine the people just listening to this on the news. No wonder they just live for 2 weeks holiday a year. No wonder they just live for a pay rise, right? They cannot see possibly the vagaries of everything going on, especially as we shift to a multipolar world, right? But we do understand it. So the best we can do is look at the salient points and just try and drill down to the things that are creating momentum towards our goal. And you can't really be involved with this unless you own Bitcoin, right? The majority of the people in the world don't own Bitcoin. Therefore, they just let it wash over them and they just put up with the next thing, which is going to be CBDCs, and it's going to be universal basic income. And they're going to wonder then why they're being restricted and why they can't do this and why they can't do that over this next decade, right? Or why AI is taking more of their value, all the rest of it. You've got to own the assets. You've got to own the technology. And therefore, you're using the technology, you're not letting it use you. And it starts with sound money. So Japan's finance minister just said, and this is a good example of this, it's crucial to allow Bitcoin on stock exchanges. Okay, now they've got a very different regime in Japan now, just as they've got a very different regime in the US, and just as we're starting to get different regimes coming into Europe. Now, people are going to castigate that and push it back, but you'll notice that all these regimes are business people. They have business people in the political echelons, right? They're reducing this 20-year process we've been through, whereby you've got a lot of people who are coming in trying to be nice to everybody, and you're ending up with the challenges that we're seeing now in 2025, 26. Okay, Japan has vastly changed in the last few years, and it needed to. So if they're saying things like that, along with the States, along with Russia, then you can bet your bottom dollar that the Europeans, etc., will follow, as we'll find out in a minute. US Senate Agriculture Committee to hold Bitcoin and crypto market structure bill markups this week, in addition to the Senate Banking Committee. Okay, so this is two major lobby groups now coming through in backing the crypto structure bill. Okay, behind all that, Senator Loomis said Congress is close to passing the crypto market structure legislation. So it's highly anticipated. We've been watching this for probably over 12 months, actually, since Trump came in. And the whole idea now is just to see the effects this has. The main effect that we're looking for, obviously, is opening up of liquidity. It won't have immediate, it's not, nothing's going to move quickly, but it will move a lot more quickly than most people imagine. So there is a perspective to be sought there. And at the end of the day, if you are close to the center of the money supply and you own Bitcoin, you're going to get the net benefit of that, because all the companies that are going to start to be attracted are given the green light. Yeah, they don't understand it, but they're being given the green light. They're going to try and take their cut. Yeah, they're going to abuse it, but they're also going to use it. And those of us who understand the difference are going to be the beneficiaries. Treasury Secretary Bessent urges the Fed to cut rates further in 2026. So again, back in the day, that would have been a major statement. That would have been a headline on this page. But now the interest rates are such a smaller entity. It's still as big, but the pie's bigger, right? But it's such a much smaller concern in terms of the effects of what happens to asset prices as they cut interest rates. Everybody should know that by now in this community. And that's why it's a game. Yeah, that's why it's such a simple game for everybody. But the fact that the Bessent is continually putting that into the system means he knows something we don't, right? Which obviously he does. And the whole idea is to make sure that we get a beneficiary of that, not a victim of it, especially if you're a fiat currency saver, for example. Savers are losers, asset owners are winners. Just in the last 3 weeks, we've seen the Fed starting to buy over 40 billion per month in US Treasury bills and notes. Yeah, that started on the 1st of December. So this is, again, just all the signatories we need to show that they're basically going through QE4, okay? We've spoken about this many, many times over the years. It's very easy to see what happens to asset prices as they print currency, which is one of the fundamental reasons we even exist as DBM. Trump is calling for Fannie and Freddie to buy back 200 billion in mortgage-backed securities. Yeah. So what he's basically doing there is he's installing QE through the back door. If you've studied what happened in 2007, 2008, and the reasons for that great financial crash, as they called it, and you understand Freddie May's part in that, and the reason it all came about, and why now you've got this huge difference between affordability in startup properties compared to what they were maybe when we were younger, 20, 30 years ago. The whole idea is very clear. So Trump is doing what he can, but all of it is the same. It's just put in a different, it's just being put in a different way, but it's all the same stuff. They're going to have to be very, very careful with it. But what it means at the end of the day is just printing more currency at lower and lower interest rates and more borrowing. And that's probably going to be the case for the rest of our lives, by the way, right? And it's not something we should necessarily wish for, because the vast majority of people don't know what you know. But if you're going to be mercenary and businesslike about it, the more assets you own, the more you actually want them to keep printing currency. That's how crazy it is. But that's why you can't be the richest man in Babylon. You've got to share this information to as many people as possible to own assets as well, because most people are going to get crushed by this phenomenon of extended fiat currency issuance. UK, sleepy old granddad UK, okay? The UK crypto regulations officially, finally, 2026. Welcome to the party, UK. The FCA outlined its new FSMA gateway, how it will work, allowing the scope of crypto firms to apply for authorization, use temporary permissions, or wind down as the UK crypto regime goes live. And they've already admitted, as I said last week, that they're simply going to copy the American model, right? Which is just embarrassing for the UK, but not as embarrassing as for Europe, who aren't even doing any of this yet. They're trying a bit with Micah and they've tickled the edges, but they're really not doing anything that's entrepreneurial, remotely imaginative, or remotely driving true value into their constituents. Yeah, the UK is barely doing it. The European Union is not doing it at all. Well, at the level we're talking about. Okay, so go figure. The US government is calling for a 10% one-year cap on credit card interest rates. Now, this is what do you say about this? Anybody who's got a credit card or had a credit card knows that you're basically working with legal loan sharks. Everybody knows that, right? 20%, 24%, 26%, whatever, right? And they'll just screw you to the table whenever you get involved with that. And anybody born, 70s, whatever, 60s, 70s, as soon as you turned 18 in the 80s, whatever it was, you were getting a letter through the letterbox saying, welcome to the world of debt. Would you like a credit card? Yeah. And what do we do as kids? Of course I really do. Right? And you're in the system. So that's only been a phenomenon in our lifetimes, by the way. Go and speak to your grandparents or your parents even and ask them, do they have credit cards? I think you'll get an answer from that. But the whole idea is that now, just as they're doing with these 50-year mortgages that they're starting to create in the US, and this will echo globally, it has to, because these are all huge companies, right? But if Trump gets his way, and on the 20th of January, is able to install that 10% 1 year cap on existing credit cards. The US don't go out, if you're from the US, don't go out getting new credit cards. But it's existing as we understand it. Then obviously you can start to think about, well, cost of borrowing is 10% and Bitcoin CAGR is 30%, just like we do with our collateral. What do you think the smart people are going to do? And this will echo globally. So if you are in a position where you've still got credit cards, start to write to your MP. Start to say, hang on, the US have got these benefits from MBNA and JP and all the rest of it. Why aren't we getting it? Come on, UK government. Come on, French government. Come on, Italian government. Come on, South African government, Australian government, New Zealand government. Where are you? Why are the US looking after their people and you're not? Where's your entrepreneurial spirit? Oh, I forgot you haven't got one because you're a liar. The whole idea is that this is majorly shifting what's going on in terms of keeping the fiat system ball being kicked down the road. And for the ordinary person, it'll be, here's an airdrop check of $2,000. Here's a 10% cap on my credit card. Here's a 50-year mortgage. They're just going to get sucked into that for even longer problems as they go forward, because this can change on a sixpence when the next government comes in. Whereas on our side of the fence, because we own the assets that are going to be the net beneficiary of this extra liquidity, we're going to accelerate our ability to 2030 to be in a much stronger position than we even are today. It's mercenary, it's business-like, but unless you understand what's going on globally and macro, you're never going to understand this, which is why we do these calls. Hong Kong's top financial regulator says it plans to serve as this makes me laugh, serves as a bridge to China for Bitcoin and crypto in a $19 trillion market. Now you've got a, I don't know what to say about China. What can you say about China? I mean, they do things because they want to do it in their way, and they always have for 1,000 years, right? They were isolationists up until the mid-20th century, and then everything started to shift, but they still have that mentality. They'll do it their way. I don't know if you've ever been to China, spent a bit of time in China. I have over the years, and they're a very, very clever race of people. It's got to be said, right? But they have it their way and they do it their way, and they try and have their cake and eat it, right? And they're using Hong Kong, as we've known about for a while, as the bridge. It doesn't really matter, because all it means is we can now access Chinese liquidity in the world we operate in, right? That's the macro and geopolitics at the same time. Now, last but not least, Davos is coming up in a couple of weeks, and Trump is going to be there this time with his echelon. He's already given them lots of warnings about what he and the US are now going to do, and in fact have done in many ways already. Now, all this is net positive for what we do as digital business owners, up to a point. So you're going to find quite a lot of things accelerate, and you're going to find a lot of countries have to slipstream what the US tells them to do. It's already happening. He's already taken out, various supply countries, let's say, Iran, etc. Venezuela is taking them away from the power base of China and Russia. He's doing that on purpose. And he's finding ways for people to buy up and get hold of treasury bills, which is really all he wants at the end of the day, because he wants to keep the dollar hegemonic. So it doesn't really matter to a point, but what does matter is the speed with which this change happens and how people will react in terms of going to sound safe harbors. And traditionally that's been gold. In case you've been under a rock, you're already noticing that happen. Well done if you've been accumulating gold for the last 10 years. And inevitably that's going to move across to Bitcoin as well. Inevitably. Right? You might not see it, you might not understand it, you might not agree with it, but go and look at the charts, go and look at the history, go and read the sound money data, and you'll see exactly what's going to happen. So keep an eye on Davos coming up in the next few weeks. We'll talk more about that, obviously, as the time comes. Now, to wrap it up, in terms of all this information being distilled, and then most importantly, taking this realization and education into application, you're going to need to go through steps. And none of this is worth anything unless you're at least dollar cost averaging Bitcoin and also putting equity to work to create cash flow. Now, that's going to take time, right? And then it's going to take skill. And then it's going to take resilience. And then it's going to take advancement. And then it's going to take all sorts of things for you to be able to convert yourself to a fully fledged digital business owner. That's why we have the sequence. So you start where you are and you work through the channels. If you want to accelerate it and do things at your own speed and be able to dip in and out all the time, you go to the Wealth Builder series and you go through each module in sequence for the next 12 months. You can accelerate it. If you're getting started today, you can do 1 to 5 in one day if you want. You catch up and then you work with people who've got what you want and can prove it, and we go through the steps. Because the next part of this call, you'll find the link below, is all about the updates as to what we're doing with each of the constituent elements of our blockchain factory in terms of managing consistent cash flows, consistent equity, consistent cash flows, consistent equity. That's what it's all about. All right. So if you want to get stuck in with us, you're more than welcome. We'll see you in the academy, and I'll see you next time.